What's up, you guys? Welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. My name is Carson Rouse, and today I'm going to be showing you beginners out there, you beginners in the stock market, which stocks are the best when you're first starting out. Before you start investing large amounts of cash into the stock market, before you even really know what you're doing, it's important to get your feet wet first. Just put a few dollars in here and there and go into safe stocks. When you're just learning about the stock market, you really should stay away from any stocks that are too volatile or speculative, because that's what makes it way more likely for you to lose a lot of your investment. I know, you're excited to get into the stock market. I know you want to invest in Tesla and some penny stock that your friend told you about, but I'm telling you, stop it right there. Just take it slow, and I promise you will thank yourself in the future. By far, the most difficult part of the stock market, by far, is just letting your money sit there and not selling when the market goes down or buying up a bunch of shares when it starts going up. It's really tough to just sit back and let your investments do its own work. It's also very important to realize what you're invested in, to understand the business model, understand what you're invested in. With that said, I'm going to be going over some stocks that are easy to understand, have very little to low volatility, and just some other characteristics that make up a good beginner stock, and just good stocks in general, stocks that I would invest in. I am not a professional, however, before we get into the video, make sure you guys go down and smack the like button on this video. I literally want the like button to turn red. I don't want it turning blue, I want it turning red, but make it blue. By the way, one more little tidbit, the price of these stocks shouldn't really matter as much now due to the fact that many brokerages offer fractional share investing. So even if you only have $1 to invest, you can invest in the most expensive stocks. It doesn't really matter. Number one, the S&P 500. Now, the S&P 500 is not a stock per se, but it is in fact an index that many other stocks track. One great example is VOO, ticker symbol VOO. It is owned by Vanguard, and they track this index. So when you're investing in the S&P 500, you're not really investing in a single stock. You are instead investing in what is known as an index fund, which is a conglomerate of a bunch of different stocks. The S&P 500 in specific tracks hundreds, about 500 of the highest market cap companies within the United States. In a way, it's basically like you're investing in the stock market as a whole. You're just kind of betting on the American economy, and the S&P 500, historically speaking, is one of the less riskier ways to invest in the stock market. Year to year, yes, you will experience some volatility. That's a fact. However, long-term perspective, you will get a great return. Historically speaking, you're going to get about an 8% annual return, which is amazing so long as you're patient. Even Warren Buffett himself recommends that Americans should put their money into this index fund. Number two, Coca-Cola. Coke is one of the most well-known brands ever, and behind it, one of the largest companies to ever exist. Their sales are absolutely ridiculous, producing tens of billions of dollars in revenue year over year, whilst having amazing profit margins. Their business model is pretty simple, which again is very important when you're a beginner. You gotta understand the company. Coke basically sells its syrups to bottling facilities, or it sells its finished products directly wholesale to retailers or directly to consumers. That's their main source of revenue. They have a few other streams though. Again, it's very important to understand what you're investing in, and if you want to get more detail about Coca-Cola's company and their business model, it would only take a little bit of research. Coca-Cola has some great valuation metrics, and historically speaking, they're not too volatile of a stock. Now, of course, with the virus, they have been struggling to recover. In fact, they are back to near the prices that they were back in 1998, but the only thing that I see there is better value. They also pay a great dividend, and it's important for you to understand the benefits of a dividend. All around, I think they're at a good value, and they're a great first stock to own. It's almost like an American tradition for Coca-Cola to be your first ever stock. You gotta do it. Number three, Berkshire Hathaway. Similar to the S&P 500, Berkshire Hathaway is definitely not a one-trick pony. They are a holding company with stake in many very large American companies that is led by the one and only, the man, the myth, the legend that we always talk about on this channel, Warren Buffett. Warren Buffett has a deep-rooted faith and value investing, and it has paid off for him very well. He is one of the richest men in the world because of it. Their biggest holding that takes up 35% of their portfolio actually is Apple, with other notable holdings including COCA-COLA, like I just talked about, and many banks. Since the 2008 recession, they are up a little over 200%, while the markets as a whole are up over 300%. So they were outperformed by the market, but there is a silver lining. The silver lining here is that this is very uncharacteristic of Berkshire Hathaway. They are usually the ones who are beating the market year after year. They have produced some insane returns in the past few decades. It's just ever since the recession, they just haven't done as well as the market. But I would say this probably won't last very long. Berkshire Hathaway is also diversified into some businesses under their own brand, like insurances and selling real estate. While this is a tad bit more risky than investing in the S&P 500, just because there's less holdings and they're hand-picked, generally speaking, the risk that you're going to pay is going to get you a higher reward. Number 4, public storage. I'm going to be completely honest with you guys. This may be the most boring company on the planet and very boring to invest in, but the whole point here is keeping you interested even when it's boring. Now, their stock has well underperformed the market in the past few years, but they are very low volatile. So if you just want to know what it's like to have money in the market and also don't want to lose it all on a bad day, then this is the perfect company for you to be invested in. Like you'd expect from their name, they own and operate self-storage facilities, which is the perfect thing to have in this country because people just love buying excess crap that they don't really need, and that's probably going to continue. So they pay somebody to hold on to their excess crap, paying rent every month. Now, they do pay a little dividend similar to Coke, but I understand that you guys are beginner investors. You probably don't have a whole lot of capital, so the dividends probably won't mean much to you, but it's still important to understand that you can be paid cash by these companies. The most important thing that you can do when starting out in the stock market is starting. That's right. Don't get too caught up in analysis paralysis where you literally are just so crammed down by which company should I invest in. I mean, don't get me wrong. You should do research. Find a good company to put your money into. But when you're starting out in the market, just start, man. Realize what it's like, and I promise you'll love it. Remember, everybody starts out a beginner in everything. The expert stock trader, the expert stock investor, Warren Buffett, he started out as a beginner in the market just like you. So work hard, happy investing, please subscribe, and I will see you guys in the next video.